This is the Secured Entrepreneur Show, and I'm your host, Aurorah Dey.
Welcome, and thank you for joining me here on the 17th episode of the Secured Entrepreneur Show. Well, it's the official first day of spring, and we are near to the close of this year's first quarter. We do hope that it has been as prosperous for you as it has been for us. Now, I've promised many of you that I would start putting out more information more frequently in addition to some YouTube videos. Now, you're going to see a lot happening this week because I'm going to answer a lot of the questions that we've been getting here at Aurorah Dey Consulting. So to start, entrepreneurs and investors who started their LLCs back in 2016 received a notice from the IRS upon applying for their employee identification numbers. This notice that you receive states that your entity is expected to furnish a 1065 tax filing to the IRS by April the 15th of the following year. Today, I will tell you when and why you won't do a tax filing for your LLC. I'm Aurorah Dey, protecting your business starts before you open for business. Getting right into this, you must remember that your LLC is a pass-through entity, meaning that it does not pay federal taxes. Now, depending on how you have allowed the Internal Revenue Service to view your LLC, your entity will file one of four ways. The first and the most popular is for single-member LLCs. And for long-time secured entrepreneur listeners and all of my clients, you already know I am dead set against being a single-member LLC. However, the single member will file Form 1040, which is their personal tax return with a Schedule C, a Schedule E, or a Schedule F. So the first way, you're already seeing that this does not require a 1065. The second, and to break this down for those of you who formed an LLC as a partnership, yes, you may file Form 1065 if your company had expenses that it wants to claim as deductions or credits. I repeat, if in fact you have allowed the Internal Revenue Service to view your LLC as a partnership and you had expenses that you desire to claim as a deduction or a credit, you may file Form 1065. Otherwise, an LLC with no business activity, meaning no income, that is taxed as a partnership is not required to file a partnership tax return. So you see the second way, there's no 1065 here either. The third thing would be Form 1120S. If in fact you have asked the Internal Revenue Service to view your entity as an S corporation, here again, an S corporation does not pay taxes as long as it follows the tax code under subchapter S. An S corporation will distribute its profits or losses to its shareholders, who will then report them on their personal tax returns. If your LLC has multiple members and elects an S corporation designation, its members will receive a Schedule K-1 showing their self-employment income from the company. The LLC will also submit a copy of those Schedule K-1s to the Internal Revenue Service for each member. So you see, the third filing is not a 1065, okay? The last type of filing would be on Form 1120. If your LLC has elected to be viewed and act as a C corporation, it must file Form 1120. Now, in this case, there is no flow through to shareholders. This is not a pass-through tax entity situation, all right? The LLC does pay corporate tax as a C corporation. And this is why I encourage those of you who are still having trouble understanding the full scope of the benefits of an LLC and how it can be a cash machine all by itself. I encourage you to take the LLC Basics course, which is now available to you to enroll into over at AurorahDayConsulting.com. All right, I'm ready to get into the next episode, so please feel free to leave your comments and questions and subscribe here on iTunes, and visit me, Aurorah Dey, on YouTube, at Aurorah Dey on Twitter, Aurorah Dey Consulting on Facebook, or simply stop by www.AurorahDayConsulting.com. That's AURORAHDEY Consulting.com. Until next time.
With Aurorah Dey, you are secured.